What is a futures market? A futures market is a market in which people purchase and sell futures contracts. They also buy and sell commodities. It is an auction market in which traders buy and sell on the trading floor of a futures exchange. The futures contracts are for delivery on a specific future date. Participants trade, that is, buy and sell, their future delivery contracts and commodities in a futures market. The terms futures market and futures exchange have the same meaning. The futures market acts as the mediator between the two parties involved. In contrast to an option, both parties of a futures contract must fulfill their contractual agreement on the delivery date. Some futures contracts require physical delivery of the asset. In others, the parties settle with money. There are hundreds of futures markets across the world. The Chicago Board of Trade, Chicago Mercantile Exchange, Commodity Exchange, Inc., Kansas City Board of Trade, and the New York Mercantile Exchange, for example, are futures markets. These four markets make up the CME Group, which is the largest futures exchange in the world. The London Metal Exchange, UK Futures Exchange, and the Risk Management Exchange are also major futures markets. A futures exchange institution not only acts as an intermediary, but also reduces the risk of a default occurring. Both parties require a margin, that is, an initial amount of cash. The margin is typically 5% to 15% of the contract's value. As a futures price changes on a daily basis, the price that was agreed upon at the time the contract was made, and the change in a futures price, is settled on a regular basis. Thank you for watching this brief video on the futures market.